Tony Hansman is here from Guardian Financial Advisors. Thank you very much for coming on the show. Appreciate it. Okay, wow. That's all I can say about yesterday. Terrible. Okay, we have a couple questions here from some of our viewers, and then hopefully this will give some folks at home some ideas on what to do from here on out.
Absolutely. That's what we're here for.
This is from Jay Fritchie. How should I adjust my portfolio with potential AAA rating downgrade? Now, kind of translate what that question means for some folks at home, too.
Well, first of all, we know that Congress, they upped the debt ceiling recently.
Right.
Okay, but the problem is they kicked our debt problems to the curb. They just keep kicking it down the street.
Right. Somebody explained it to me as like you kick a tin can just up a couple blocks or whatever.
That's exactly right.
We're going to have to deal with this problem again, right?
Yeah. We're going to have, our generation is going to have a lot of problems going forward in the future. We got to come together. We got to put a plan together that's going to work. We don't want to get into the vicious cycle that Greece and Italy and Ireland and Spain are going through.
Right.
So the reason our country didn't go through such a big recession a couple years ago is because we threw so much money in bailout and into stimulus packages.
Okay.
So if they downgrade this AAA rating, you're going to see the first companies involved are the government agencies, the government-sponsored companies like Fannie Mae, Freddie Mac affected. If that happens, you're going to see problems with banks, credit unions, and insurers. We don't want this to happen at all. So what I'm going to suggest is if you have long-term government securities, pull back. If you're over-diversified into U.S. stocks, pull back.
You're not saying get out all the way.
Don't get out. Just pull back a little bit, because I think when things go down, that's a perfect buy time too. But don't let all the Wall Street's hype and horror distract you. Okay, so. Don't get distracted in the next 3, the next 5, the next 10 minutes. Refocus on the next 3, the 5, 10 years.
Okay, gotcha. All right, what's an investor to consider with all the economic challenges? This is from, I can't even pronounce his last name, Koenigsman, I believe.
That's a good guess.
So what's an investor to consider with all the economic challenges? What should we do?
Yeah, nobody cares about your money more than you do.
Yeah, true.
Okay, so you got to be an active investor these days. This passive stuff is things for that was old.
Put the money in and forget about it.
That's exactly right. Don't be doing that anymore. Yesterday, with a 500-point nosedive. Okay, look, I'm still optimistic about the market, but I'm cautious too. Equities are the greatest wealth creators that we have, but we have to stay diversified, and we have to rebalance as needed. But Tom, what I see is so many folks come in with inefficient portfolios. You know those guys that just have, let's say, just one stock? You know what I'm talking about?
Yeah, I'm that guy. I'm that guy.
I didn't say anything. All right.
I've got Apple, that's all I've got.
but they come in and they're taking way too much risk for the returns that they're getting. This is insanity. So, you can get safe rates of return and be a conservative and a savvy investor. You just got to stop the insanity. You got to do something different. Most people haven't made a penny in the last decade. You got to make a change. And the last thing is stop speculating, okay? Whatever the hot thing is, gold, silver, commodities, corn, cotton, whatever it is.
The new .com
That's exactly the new .com that we were talking about earlier. Don't do that.
Stay focused.
Stay focused with a core portfolio. If you have excess money, what I call mad money, go play with that. But most people, they buy high, they panic when a day like yesterday happens, and they sell low, and you lose every time.
Yeah, all right. Tony, thank you very much.
Absolutely.
Very good advice. Stay focused, he says.